this service will be charged 6%. Okay, next one. The 8% of service tax will be charged if the service is provided after or on 1st March 2024. Example, if the POI period of insurance is 1st March 2024 and it expires on, example, 31st May 2024, so the service be provided within these 3 months will be subject to 8% service tax. Okay, so next one. If taxable services are provided before 1st March and extend beyond 1st March 2024, the service tax rate will be as below. So this means that, example, the period of insurance is 1st January 2024, early of this year, and this is a 1-year policy, so it will expire 31st December 2024. This is the policy that under this category. So how would be the tax treatment? So the treatment is the service that we already render in the January and February, it will be charged 6%. For the remaining 10 months, March until December, it will be charged 8%. This sentence is based on the latest update on the 7th of February that we received from the custom. This is the draft versions. If the payment has been made before 1st March 2024, which means that now onwards, but the service is provided after 1st March, the payment is subject to the old rate, which is 8%. Which is 6%. Which means that if the POI is 1st March onwards, but you already collect from your insured and you remit the payment to us, it will be charged 8%. It will be charged 6%. Which means that, example, 1st January, and then until here, 29th of February, all this will be 6% for sure. If this is a 1-year policy, it will extend on 1st March 2024 until the 31st December 2024. If the whole policy, you remit the payment now, and by 29th of February to GMI, to us, the whole policy will be charged 6%. Okay, next one. This is some example in the amount, which is much more easier for you to understand. If the total premium, the 1-year premium is 1,008, and the premium for the first 2 months, January and February, is 300. For the remaining 10 months is 1,005. Okay, if there's no payment is made before 1st March 2024, the period D1, this area, that means January and February 2024, it will be charged 6%. In terms of this period, it will be charged 8%. Okay, I understand that you asked if the policy already issued now with the same 6%, what will we do? So if the policy already issued with 6% and there's a no payment before 1st March 2024, at a later date, we will raise an endorsement to charge the 2% clawback. Okay, the 2% clawback, no worry, it's just from this period, March until December, the expiry of the policy date. Okay, next sample, everything remains the same. If the payment is made before 1st March, this is not a full payment. That sample, let's say, is less than 300. Okay, remember my scenario is this period is 300. So this period will be charged 6%. If the insured paid less than 300, for sure it will be 6% on these portions. But the period D2, this one, because of no payment being collected paid before 1st March, it will be charged 8%. Okay? Next one. If the payment is made before 1st March, and this is a full premium, the whole 1,008 already been paid, D1 area initially at 6% will be also charged 6%. The D2 area, this one, March until December, it will be charged 6% as well. As long as you remit the full payment before 1st March, the policy will be charged 6%. Okay? So next one. If the payment is made before 1st March, but the payment is more than 300 but less than 1,008. Example, yeah, this area is 300. This area is 1,005. But your payment is more than this area, like 700. Okay, so how would be the tax treatment? For this area, 300 that we paid, for sure it will be 6%. For the extra 400 that we paid for this area before 1st March, it will be 6%. For the remaining 1,001, this area onwards, if we do not receive the payment before 1st March, it will be 8%. Okay? No worry of this. After this, at my last slide, I will show you more example, yeah, which is easier for you to digest. Okay, next one. For policy issue and expire by 1st March 2023, all will be 6%. This is last year, yeah. Whichever issue by 1st March 2023, whichever issue expire by this date, it will be 6%. No issue on this. This is our current practice. If the policy's issue and inception date is after 1st March 2024, it will be 8%, which is moving forward method. Okay. So for this gray area, policy with inception date from 2nd March 2023 to 29 February 2024 affected by these transition rules, which means that if your policy inception is to 2nd March 2023 or in the May or in this year January, everything will be impacted by these transition rules. Okay? This area will be 6%, and the area after 1st March, it will be 8%. So to help your customer to save for the 2% of the increased tax, please remit all the payment to us before 1st March 2024. So the tax rate will be 6%. Okay, next one. Another example, how are we compute the 2% extra tax here? Same sample, the full premium is 1,008. The first 2 months, January and February, is assumed 60 days. And the March until December is 306 days. So the full year is 366 days. So how are we going to compute the 2% service tax? Example, if no payment is being received, so the adjustment is, for this, of course, no issue, is 6%. For here, it will be 8%. So how do we calculate this 8%? We use the 1,505 days times 2%. How we get this 1,505? The 1,505 actually is the month of March until December is 306, divided by the full year 366, and then times the full premium 1,008. So we get this amount times 2%. Okay. If the payment has been received before 1st March, example, partial payment, so only those areas that without payment will be charged on the 2%. Okay. So next one, same scenario, and this is the late book in. So everything computations will be the same as per my previous slide. Okay, so I move to the next slide. If one day your customer asks you to cancel the policies, example, the policy will be cancelled after 1st March, say 1st June 2024. Remember the rules, 0 to 2 months will be 6%. January until December, assume January until December, the first 2 months will be 2%. The remaining 10 months will be 8%. Since the policies is booked in before 1st March 2024, so it will assume that the 2% service tax will be endorsed for the policy after 1st March 2024. What we do is, this period, we will refund the service tax at 8% to the insured. Okay? So, next one. If one day your insured asks you to cancel a policy, but this round is the date before 1st March 2024. Since the cancellations is before 1st March 2024, so the transactions will have a mixture of 6% at the front, 8% at the back. Okay, what we will do is we will adjust the 2% for this period. Okay. Okay, when we will do the so-called endorsement for those policy that issued before 1st March, we will one time do the endorsement. We will perform the endorsement in once. Once we perform, of course, we will let you know. In terms of the policies that issue after 1st March, we will endorse it on the monthly basis. Okay. Okay, this is my last slide with more illustrations on the sample that I provided just now. Maybe we will be lost, but this one, I guess it will be help you to better understand the scenario. For the first case example, the full year premium is 15,000. And the full year premium so-called will be incepted and expired before 1st March 2024. And the payment is before 1st March 2024. So for these policies, it will be 6% service tax. Okay, next one. If the 1 year premium is 12,000 and all the 12,000 is expired before 1st March 2024, but you remit the payment, or the insured remit the payment after 1st March 2024, this one will be 6%. Okay. Third scenario, the premium is 18,000. All the 18,000 will be expired before 1st March 2024. And the payment 10,000 already been paid before 1st March 2024. So the 10% will be, sorry, the 10,000 will be charged 6%. The remaining 8,000 will be charged 6% as well. Because the policy initially is 6%. Okay, next one. Example of number 4. The full premium is 5,000. But the premium will be incepted or expired after 1st March, which means that this thing will be charged 8% of service tax, but the insured paid to us before 1st March. So this 5,000 will be on 6%. Okay. Item number 5, the full year premium is 20,000 and the 20,000 was incepted after 1st March, which means that the whole services will be charged 8%. And the collections is after 1st March. So all this whole 20,000 will be 8%. Item number 6, the full premium is 20,000. And the policy inception date is after 1st March. the insured is good enough, they pay us 5,000 in advance before 1st March, and the remaining 15,000 is after 1st March. So how is the treatment of the service tax? The 5,000 will be 6%, and the 15,000 will be 8%. Okay, for item number 7, the full premium is 18,000. 5,000 will be like January or February inception date or the coverage, and the remaining 13,000 is the effective after 1st March. But the insured pay full premium before 1st March. So the whole policy of this 18,000 will be 6%. Item number 8, the premium is 15,000. 3,000 will be the service provided before 1st March, and the 12,000 is the service provided after 1st March. The payment collected before 1st March is 7,500. So the 3,000 will be charged 6%. This is the initial service tax, and the remaining 4,500 that we pay in advance, but the service not yet rendered, it will be 6% as well. The remaining 7,500, it will be charged 8%. Okay. Item number 9 and item number 10 is similar. The policy partially is incepted before 1st March, and the remaining is the service rendered after 1st March. But the full collections was paid after 1st March. So what happened to this? It will be 2% charge, 6% charge on these portions, and 8% charge on these portions. Okay, so you just have to bear in mind that if the policy, the service rendered is before 1st March 2024, it will be 6%. If the service rendered after 1st March 2024, it will be 8%. If the service rendered, let's say like 1 year policy, it will be from January 2024 until 31st December 2024. The first 2 months will be 6%, and the 10 months will be 8%. Okay, the 4th point they need to remember is if the insured pay us in advance for the service rendered after 1st March, the policy will be charged on 6%. Okay, so this is the last, this is the end of my sessions. Thank you, everyone.
Okay, Kelly, maybe you can check in the chat rooms. There are a lot of questions raised by our agents on this. Perhaps you would like to attend those questions that has not been attended, and I will unmute agents' microphone so that they are able to ask questions. Wait.
So I should read from the chat box, or there's numbers of questions.
Yeah. I noticed that Amarjit also have actually attended a few. There's some of it they have not attended. So let me just unmute them. Maybe they want to ask a question.
Okay,
take a bit of time.
If we go down the question from the top,
This one is
Okay. I have unmuted your microphone. Please be mindful because we don't want 2 or 3 people talking at the same time.
Muslim number இருக்கா?
Yeah.
Muslim number இல்ல? 017. Yeah. SE.
Okay. So anybody have any questions? You may unmute yourself because I have enabled your microphone.
Hi, this is Susan.
Yes, Susan, carry on.
Okay, can I just ask for SME and Moto renewal? If the renewal date is in March, after 1st of March, but renewal is done and with full payment by 29 February, will the SST be at 6% and will there be a clawback of 2% after that?
Okay, Susan, for these questions, because the service rental is after 1st March and the collections is before 1st March, the whole policies will be under 6%.
Okay, this applies to SME and Moto as well. So there will not be any clawback for the 2%, right?
Yes.
Okay, thank you very much.
Okay.
Any more questions from the floor? You may unmute yourself because I have enabled your microphone. It will be easier.
Hello,
Yes.
I'm Ruby from Hubson Enterprise. I'm referring to the question on the cancellation of policy. Because let's say if the policy enforced before 1st March, charging at 6%, but subsequent they cancel the motor policy probably on the so-called 1st April or 1st May. So how do we refund them with 8% for the remaining period? Is it at expense or is it at the company expense?
Ruby, example, your these questions, the policy inception date is, let's say, 1st January, and then the expiry date is 31st December 2024, right? So January until February is 6%, and then March until December is 8%. So we already endorsed the extra 2% on it. So March until December is already not. Then now they ask for refunds. Maybe inception date is February So the February will be 6%. The after February, March onward, it will be 8%. This is not from company funds. Can see the picture.
So which means that they, in their, for customer perspective, they still pay 6% for the whole year, is it? Or do they need to pay
January, February, they have to pay 6%. March until December, because the policy, the full policy is example 1,008 is calculated under 6%, right? So March onward, it will be extra 2%. So we generally we will endorse the 2% for March until December. Okay.
So we have to get the customer to pay, is it? The 2%?
Yes.
Oh, which means that even though they pay before 1st March also,
If they pay full before 1st March, then it will be 6% lah.
or let's say if they don't touch cancellation or whatsoever, so it's 6% unless they want to cancel .
Yes.
Is that right? Right? Okay. All right. Thanks.
Yeah, can I ask a question?
Yes.
Okay, refer to the question that the agent just asked. The policy incept January 2024 until next year, right? Payment all fully paid at 6%, right? So cancellation done in April.
Wait, your payment fully paid is fully paid by when? Before 1st March, Okay.
Yes, at 6% fully paid. So there is no endorsement needed, if everything's smooth, right?
Yes.
Now, there's an endorsement in April. The refund will be at 6% or 8%?
Will be at 6%,
6%, not 8%, right?
No.
Okay, thank you.
I have a question.
Yes.
I'm for Shirley from MediSavers.
Okay.
Our premium incept on February, but we only make payment to you after March. So the tax rate is on 6% or 8%.
Okay. Because from the transition guideline, the draft versions, the government mentions that the payments must be made before 1st March. So you have to remit the payment to us by 1st March. Because we are the party who remit the extra 2% tax to the custom.
Okay, so it's on payment basis.
Payment received by us, by me. But your payment must be before 1st March, yeah?
I mean, we make payment to January before 1st March, 6%. After 1st March is 6%, 8%.
After 1st March will be 8%.
So if let's say we look back to the service tax illustration, the number 2, right? So the number 2 one, 12,000 is total premium bill. Is all before incepted before 1st March. But payment
I understand where you're coming from, because this one, the whole service is rendered before 1st March. There's no kaki here and there. Everything is here, so this portion will be 6%. Just now your sample, you say inception date is February. So if let's say this is a 1-year policy, so it will be end next year, January. So only the month of only the month of February is 6%. After February, everything, the 11 months will be 8%.
I see.
Explain the service more.
An example like this, number 7, portion of it is a service render in January, February, and then the remaining portion is after 1st March and onwards. So these portions will be 6. This portion will be 8. If you collected full payment for this before 1st March, then everything will be 6%. The service rental.
Okay, you mean all the premium that come in before March is 6%. Any premium come after March is 8%.
Okay, you don't confuse that. Example, like the first 2 example. Example, this is let's say 2 months policies 2-month policy, which means that 1st of January, and then will be end 29 February. So all this policy ready to show all this month is 2%. No matter when you pay, it's 6%. No matter when you pay, it will be 6%. Okay? Like this sample number 7, let's say this is a 1-year policy. 2 months, January, February is 5%. That means we 18,000 we divide by 2 months, something like that, and then the January, February will be like premium charge is 5,000, and then the remaining 10 months example is 13,000. So like this one kaki 6%, the other kaki 8%. This one, if let's say this premium, the insured or new agent will need to us GMI before 1st March.
You make us so confused. So sorry, we can't understand. You make it more confused. You must use the simple way to explain. You cannot make it. Seriously, we have wasted the time to hear you. Actually, we're confused. I don't understand at all.
Don't understand at all.
Okay, for just back to the number 7. Let's say number 7. All the premium come in before March. What is the charges?
6%.
Correct. Is any premium that the policy holder paid before March the 1st is 6%. Anything that come any policy that start from March 1st is 8%, something like that. You don't talk about the premium they do installment or whatever. What you really want to understand is if the premium, the one lump sum premium come in before March and one lump sum premium come in after March, then we understand. Because the way you explain it is like
that's more easier. Why you make
the 15,000 come in is split into 2 parts. What I understand for earlier part.
Now pay motor insurance by part.
Correct lah.
Yes, yes, in another shot lah, huh? Before first
Ah.
March will be 6%.
Layman term only we understand lah. Sorry
Hello.
about that.
Hi, Miss Ong.
Yeah.
Okay, I have a question regarding situation number 7.
Uh-huh.
If let's say for motor insurance, okay, full payment made before 1st March. Then in April or for example, let's say in April lah, there is an NCD withdrawal. So NCD withdrawal comes with service tax, correct?
Yes.
So the tax will reflect on 6% or 8%?
Will be on 6.
On 6. Okay, so it will follow the rate of the payment that made lah.
Yes.
Okay, I see. Okay, thank you very much.
Okay.
Clarice Peter Tai.
Yes.
Okay, one question that is in my mind now is assuming the policies prior to 1st March is a 1-year policy. Let's say I give it a date, let's say in December of 2023. When we issue the policy is 6%.
Uh-huh.
Okay, 6%. Then for whatever reason, the customer have yet to pay us. Let's say lah. So they only can pay us 1st of April. The service tax is at 6%, right?
Okay. Your scenario is something like number 9 lor, huh? Correct. Because you say the inception date is December, right? So this is 1-year policy. So for sure, December, January, February, these 3 months will be 6%, so right? And then March until the November will be 8%, no? Then you mentioned the insured pay us in somewhere April month. So will be this scenario lah. So the premium that they paid 6% will be on December, January, February. March onwards until November, it will be 8%.
Okay, that means who is going to do the endorsement? Generally we have to do a massive few thousand policy endorsement for that matter.
Yes.
For those not yet paid lah, that is.
Yes.
Okay, thank you.
Hi, Miss Ong. This is Carmen.
Carmen, is it? Okay.
Yes, Carmen. Okay, I just want to check if I have a policy due is on April, 1st of April. Since I want to escape the 8% tax, can I make renewal everything on February, end of February?
And then with payment, no? And wait, you must make sure that your this year punya policy is paid, and then you renew, then you pay as well lah. Otherwise, this year policy you will start put 1 month 8%. You get me?
No, everything is paid. My policy due April.
Okay.
I renew and paid everything on February 20th. Example.
Yes, can.
So
You can
it's 6%,
Yeah, it will be 6%.
6%,
Yes.
Okay, thank you.
Kan kita telepon Alah, orang kerja gitu.
I tak faham Tamil loh.
Hi, this is Susan again.
Hi, Susan.
Next thing, can you please explain again? Then when does the clawback of the 2% happen?
When okay.
In
So
what
let's say
scenario?
In what scenario? Okay. Example, it will be like this one, item number 5. Item number 5, example, item number 5, you issue the policy now lah, Now example will be like 6%, right? So but the payment do not receive before 1st of March. So you paid the 20,000 after 1st March. So the 2% we will charge on this.
I think this one is quite straightforward because payment came in after 1st March. So therefore, the entire payment should be based on 8%. But what if let's say, I mean, I don't understand which scenario whereby they first pay 6% and later on we request them to pay the additional 2%.
That will be the items number 9 and 10. Okay, item number 9 and 10, example, yeah. This is January until December policies. January, February 2000 will be 6%. Because of our policies already issued, the whole policy will be with 6%. So later on, March until December onwards, the 10,000 is the coverage. This one, it will be 8%. Because of our policy already issued with 6, so the 2% will be on these portions only. Because this one, your payment is coming after 1st March. Okay, answer your questions.
Okay, but if full payment were made before?
If full payment, everything before 1st March, so there will be no extra 2% being charged.
Okay. So this one, the 2% is basically more on partial payment that comes after the 1st of March.
Not partial payments lah. If let's say your policies are like early renewal for the POI 1st March, maybe now some of our insured already asked you to renew, right? So if the insured not yet paid to us 1st March onwards, of course, then we need to charge extra 2% lor. If now you renew, the insured want to save the 2%, insured pay to you and then you pay to me before 1st March, this one will be 6%.
Correct lah, but I'm talking about the additional 2% where they need to top up will only be if the policy starts before 1st of March and partial payment made before 1st of March and the balance after March. Then only the 2% additional will be charged, right, on the after March portion.
Yes.
Okay, thanks.
No more questions. Shall we end these sessions?
I have a question. My name is Moolam Saigar. I want to know if the policy is due in May, even that can be done, and the payment is made before 29th of February.
So which means that your policy is due in May.
Yes.
And you'll remit the payment before 1st March, is it?
Yes.
Okay, if the full payment remit before 1st March, the policy will be charged 6%.
Okay, thank you.
Hi, Ms. Ong. And you here. I would like to confirm how many days at once we can renew our policy. For motor policies is 60 days at once. For other policy?
Any marketing here, I can't answer. Peter Pai,
Come again? Kelly, did you comment?
How many days in advance renewal we can do?
How many days renewal we can do?
In advance, yeah. Because they want to save 2%.
How many months in advance? 3 months.
When we give out the notice, it's always 2 months in advance to the agent. So the agents have 2 months notice in advance on the renewal. But when the client want to renew, it's up to the client. We cannot force them to renew early. We're talking about annual policy, right? Annual policy.
Yes.
12 months
like
one.
Okay.
For example, let's say now your policy expire, let's say 1st March policy. January already given you the renewal notice.
Yes, we understand.
What her question is, can we renew 3 months earlier? Before the due date?
Can you renew 3 months earlier? I think there's no harm. There's no harm for you to renew 3 months earlier, but now today is already February is up home.
Yeah.
So you don't have much time left.
But the system can catch up or not?
I don't think so because like I say, we give the allowance is 60 days.
WhatsApp 给你，要再上做课。
It's 60 days. Is the renewal notice will be sent to you guys on the 2 months in advance. So that yeah, so now you want to backdate? I don't think so. We can backdate any policy, or we can. I don't think you have enough time for those any policy that is coming in 1st March already. Sorry.
Actually, we're not
Can I
talking
ask a
about the
question? Hi, Miss Ong. Can I ask a question?
Yes, yes.
I'm Amy here. I'm referring to the question, the last question that one of the girls asked. How many days in advance to renew the policy? I think what if, let's say, we already as the agent, we know that we have renewal policy in May, and today is before March. Can we renew the policies in May? That is due in May by today.
Ideally should be can lah.
But the question is whether the system can catch up or not.
But I think you see our Omni system. I think for motor policy, we can issue it ourselves. But for PA, we can do it ourselves. But there are other policies that we cannot do it ourselves, like IE. We need the company to do it, the HQ to do it. So for IE, we cannot do
I
that.
think like this one logically is can. In terms of system, we do not know. Let me check with our IT first. Maybe I will update Peter, then maybe then after Peter after you all on the early renewal.
Okay, thank you.
Yeah, good idea.
I have one question. My name is Patrick. Okay, if the policy, sorry, can I ask a question now?
Yeah.
Okay, if my policy inception from 1st January to 31st December, subsequently after March, you issue endorsement for the 2% for the additional
For the 10 months
service
will
tax.
charge 2%. Yeah.
If the client reluctant to pay the recovery of 2%, will generally write off the same amount? Because previously, when during the SST time, when the first implemented, some insurer willing to write off the additional recovery. Is it? What is generally stand on this? Thank you.
Okay, at this moment, there's no any write-off. Ideally, those insured, they already know that this announcement on the extra service tax, they are supposed to pay for it. And this topic is not, and this topic is not
the client aware of the additional 2% SST, but some those are hardcore stubborn, they reluctant to pay, So what the insurer stand on this? Thank you.
This item is not in this forum. Today, we just only update the service tax. And this one, I now have no decisions because this is the management decisions.
Hello. This 8% is based on the payment, not based on the due date.
Is both lah. If let's say the service rented is after 1st March, it will be 8% ready. If you remake the payment before 1st March, it will be 6%. It also depends on the effective date.
Okay,
effective date and collections date.
No, a bit confusing on this. Just now you say if we made a payment before 1st March, it's 6%, right? So which to follow now? You are saying it's based on effective and also it's based on the payment. So a bit confusing on that.
Okay. Now you look at my item 7 again, yeah. So the full year premium is 18,000. 1st of January inception date, expiry date is 31st December 2024, yeah. Then the 5,000 is 6%, which is January, February Punya portions, okay? And the 13,000 is March until December Punya portions. So the 1 year premium is 18,000, right? So if let's say you assume you do not see this 18,000 payment first, yeah. This one 6%, this one 8%. if you make the payment before 1st March, everything 18,000 premium will be 6%. If this 18,000 you pay after 1st March, 5,000 will be 6%, 13,000 will be 8%. So that's why I mentioned is also consider the POI. Unless your POI is only 1-2 days, so it will be much more easier. But so sad, our insurance usually will be 1-year policies. So for sure, the first few months will be 6%. The remaining few months will be 8%.
This one is portion payment lah.
I think the best answer for the whole thing is number 1 and number 5. Number 1, you pay before March. Number 5, you pay after March. I think this is not to confuse everybody. After March 8%. The number 1 before March is 6%. That's all only.
Okay.
This one installment one is more on big premium like the condo, building, all those thing in 100 or 1,000. They pay 3 installment or 4 installment. Then this thing will apply. Like for motor and for the small house fire, all those things, I don't think the whole thing will apply. Only apply on number 1 and number 5, as far as I know. Am I correct?
Excuse me, Clarice. Coming back to the question of early renewal. Let's say the policy is in May. Somebody asked just now, if the policy is in May, I want to make the client to pay now, issue the policy now, so they can collect 6%. Actually, it doesn't count anymore, right? Because the service render is going to be 1st May onwards, so it has to be 8% already. Am I right?
The service render is 1st May onward, it will be 8% because
so
of
coming back to the question, if anybody just now you said you want to check with IT whether they can do an early renewal, no point, because if the policy is, let's say in Saikong 1st May, let's say the policy is 1st April. If the policy starts on 1st April, if you renew it now, your 1st April, the moment they issue the period 1st April is already 8%. So if you issue early, also no point. Am I right?
Okay. So if let's say the policy is due April or May, you renew now is February, it will be 6%. And you make the payment now, it will be 6%.
How can it be? Because you're going to render your service only starting 1st April. Even though you renew your policy now, but your service, the policy inception, the policy effective date is 1st April 2024.
Yeah, you are correct. Because based on the renewal premium already calculate 8%.
Okay, you see my screen?
Am I right?
See my screen? Okay, this is 1st January. This is 31st December. So 1st January until 24th of February, 6%. 1st March until 31st December is 8%. Over here, this one. If the service provided before 1st March, it will be 6%. If the service provided after 1st March, it will be 8%, which means that this one, this is 6, this is 8. And then one more conditions comes out. If the payment made before 1st March, it will be 6%. This is 6% is applicable for this. This one, no more 8, it will be 6.
Are you sure, Clarice? Because or else everybody want to renew the policy now, no?
Yes,
even though the policy expires in July, August, September, October, people want to renew now. No?
This is from the draft guideline that we received on 7th of February.
Okay.
But then how early we can renew our insurance?
Again, I need to check with our IT first.
Hello, Miss Ong.
Yeah.
Hello, Miss Ong.
Yes.
One of your slide, and just now if I'm not wrong, I read all policy from first inception, 1st March is 8%, regardless of whether you pay now or pay later, it's 8%. Can you show the slide from first one until the end?
Which one? You stop me. This one?
No. Wait, no. No, this one. Wait, no. know this one. 1st March. There's one show 1st March. Wait. 1st March policy one or instruction from 1st March policy.
I think not here lah. Maybe the beginning full page.
Yeah, God.
Wait. Maybe the beginning full page. This one is it?
For those inception
because,
of March.
Because you are confusing us lah.
Just now got show the slide lah, but now we look at where it's gone to already.
Wait.
That's not 8% the one.
Before I think. Wait.
I think it's the early slide before. I remember hearing you say 8% 1st March.
1st March will be 8%, right? If let's say there's a payment before 1st March, it will be 6.
Whether it's inception or payment, 1st March onwards is 8%. That's the correct one.
Let me clarify.
This is let me clarify the issue. Now, the general condition is based on the policy. The general condition is based on the policy inception. So any policies incepted before 1st of March is 6%. Any policies incepted after 1st of March is 8%. Now that is a general condition. Now the customs has given us a concession that if you issue a policy before 1st of March, even if the period is after 1st March, and you pay in full, that concession they give you is still at 6%. So that is a concession. So make use of that concession. The general rule is still the same. Any service provided before 1st of March is 6%. Any service provided after 1st of March is 8%. And when you say service provided for insurance, is the period of insurance. So your period of insurance before 1st March, 6%. Your period of insurance after 1st March is 8%. But concession given, if you pay in advance for any services provided after 1st of March, then it remains at 6%. So that is a concession. It's not a general rule. So is that clear?
Yes.
I think the concession is stated in one of the slides. Okay, yeah.
Yes, already.
So say where it's put in red, where payment is made before, where any payment has been made before 1st March for any taxable service provided on or after 1st March, the payment is subject to the old rate of 6%. So this is the concession given by the customs.
Yes, clear. May I ask a question? Actually, now we agents' concern is that how many months in advance we can pay to fully make use of this 2% additional tax. And then if the system doesn't allow, can we just key in as new? Thank you.
You are talking about policies renewed in advance, right?
Yes. How many months in advance we can renew? And then if the system doesn't allow, can we key in as new?
I would have to check with our underwriters on this, but I believe Kelly has already said that she will inform Peter and he will inform your agency force on how many months in advance we can issue the policies. So I think we just have to wait for instruction.
Kelly, I'm Esther. Do you mind to go to the last slide, the example? Thank you. The last, number 7. I would like to check with you. How do you get the 5,000, the 18,000 annual? And let's say if I use the 18,000 premium divided into 12 months, It's not 5,000. How do you get this?
Let me explain that. 18,000 is the total premium for the policy. So in this example, we are saying that the portion of the premium before 1st March is 5,000. And the portion of the premium after 1st March is 13,000 based on the period of insurance. Of course, here we have not put in the period of insurance. But taking that example, if no payment is made, the 5,000 will be at 6%, and the 13,000 will be at 8%.
Okay, the 5,000, how do you get this figure? I just like to.
No, it's just an example.
Say the policy is.
It's
just an example. Not
example,
dividing.
No, 5,000 represents the portion of premium before 1st of March.
How about the period of cover? I understand that the first is the 1st March 8%, before is 6%. I understand that, but get this.
If you take any policy, any period of insurance, any portion of the period of insurance from inception to 1st of March is 6%.
Yes, I understand.
So the subsequent one, of course, after 1st March is 8%. This example, of course, we have not divided it equally on the period because there's no period of insurance in this. Okay, so there's no.
Okay. Thank you. Okay.
This is Susan here again. I have another question. As you know, the medical, the house, SME, we cannot issue the policy on our own. What if there is a backlog and the policy is only issued after 1st of March, but full payment is made before 1st of March? This will not impact the 6%, right?
I guess these are processing issues, internal processing issues, and we will have to deliberate on how we decide subsequent once it comes into place. We don't want to, penalize any agent for things that we are not able to process. So we are looking at that, and we will let you know on the outcome.
Okay, all right. Thank you.
Hi, can I ask a question? Sorry,
I think we can entertain one more question because we need to give room for the next topic. Yes, just one more question.
I want to ask about NCD refund. So for motor insurance, that a certain time client will do NCD refund. So let's say the policy inception date is supposed to be middle of March, 15th of March, and client actually renew and make full payment by February. Now, when it comes to, let's say, June, customer want to withdraw NCD. So the withdrawal of NCD, will we charge 6% or it will be prorated because it involves both sides?
No, it will be at 6%.
Oh, we just follow on the day we make payment, right?
Because the full policy was at 6%.
Oh, okay. Even though when we cancel later.
Correct. That is the position, correct? Yes, you are correct.
Okay, so just double confirm. My understanding is, so whatever case that we renew on 2023 before March, any time when they cancel, the NCD will be 6%. So if anything after March 1st make payment one, it will be 8% NCD refund tax also.
Yes.
Okay,
correct.
Thank you very much. That's all. Thank you.
Thank you.
All right. Thank you, everyone. Thank you, Amajit. Thank you, Kelis, for your time. And I think, Mr. Peter, you can share your deck for the next topic. As for the agents, please rest assured that all questions will be compiled by the project management team, because you have to understand that this is a project-based task. So the presenter today is actually from finance department, so they are able only to answer questions related to finance. So any questions that is related to the process or the system, we have to escalate back to IT and the respective person in charge. So with that, I think Mr. Peter, if you don't mind, can I just quickly reset the microphone because I've been getting a lot of background noise. I'll mute them back, and later towards the end I will unmute themselves. All right. Okay, let me just quickly do that. Okay, Mr. Peter, you're good to go.
All right. Can everybody see my slide?
Yes.
Can see my slide?
Yep.
Can I? Okay, good. So good morning still. All right. My name is Peter Tai. I'm now the new trainer for Generali Malaysia. So today will be my first topic. I'm glad to have 1,000 audience. So I will not bore you with some technical guide, but no choice. I have to share with you all these things because this is the new guideline given to us by Bank Negara and we have to follow. So first thing first, this is the program for today. There are 8 topics plus Q&A at the end, as usual. And I will go through one by one. If you have any question, please list it down and either you type it up or you wait until the end of the session, then you ask me, all right? Okay. So first thing first is, what is OCCPD? OCCPD stands for Operating Cost Control for General Insurance and Takaful Business Policy Document. So in short, it's OCCPD. PD stands for Policy Document. Okay. It's issued to us on the 30th June by Bank Negara, who is our regulator, as you all know. And the effective date was actually 1st January. So we are already in the second month of OCC operation, policy document operation. Okay, so what are the objectives? There are 4 objectives. Bank Negara wishes that we have all this in place so that we can improve our services to our customers. First thing first is a tool to encourage improvement in the quality of intermediary services. Number 2 is to preserve good value of products and services offered to all our customers. Number 3, to encourage innovation and improve access to insurance products and services, including for the unserved and underserved customer segment. Mainly this is to focus on the B40s and also the outskirt community of ours. For example, the smaller towns or somewhere in the outskirt in, let's say, for example, in KB or KT or even in Sabah, Sarawak. And last but not least is to ensure appropriate incentive to intermediaries for the delivery of the services to the customers. So basically, it's all very technical wording, but don't worry. In the last page, I will share with you what are the items that are being deemed as allowed under OCC spending. Okay. Now, another big word that you will know that we will mention is the word IRE. IRE is actually intermediary related expenses. For an insurance company, we have intermediary related expenses and also we have management expenses. Management expenses is ME. So intermediary meaning anybody or any organization that represent us. For our case is PIAM, because all of you are agents. So anyone who is registered with PIAM to provide insurance services to our customer on our behalf, you are all are known as intermediary. Okay, so all the expenses that are allowed under intermediary will be, can you please lower it? Can be all consolidated into this big account, and this big account is what I will share with you what is the percentage and what is allowed to be spent on later in the later side. All right. Okay, so now again, as I mentioned just now, any person who for remuneration, meaning if you do something and you are being paid, especially in our line, is just purely for selling insurance through any means, including digital or electronic. Meaning, if you have a platform that is digital platform that you sell or electronic platform that you sell, you are also will be remunerated. Okay, this is very standard. And also, if you were to be related, okay, any party that is related in terms, for example, marketing or advertising work, towing or roadside as service assistant, all these are considered as intermediary as well. All right. So long as you are part of us, you are selling insurance, and also you are rendering other services that is related to our policy, is all under RIRE, intermediary related expenses. All right. So most of your income will be coming from your gross commission, right? So basically everybody knows that. You know your commission structure. I don't have to repeat it. However, we do have other expenses that we allow to be paid to you all, and this will be lumped under this broad category of IRA. Okay, don't worry. Like I say, at the end of the slide, we have a list of what are the items inside IRA. Okay. So basically, there is also another word that is being mentioned in the Bank Negara ruling to us, that is the dual role. Dual role, I think most of you are not involved, because dual role meaning, let's say if you are our agent and also you are doing some repair work for our customer. Let's say you own a workshop and you do some repair, or you are a franchise dealer, you do 4S system. One of the system is to provide services or repair services to our customer, then you are under dual role. Or else you are just under a mono role, meaning you are just our agent and not doing two roles. Okay. Are marketing partners who do not receive gross commission considered? Yes, marketing partners. For example, you have aggregators, we have sandbox participants who are doing our online business for us. They are also part of the so-called is under the broad umbrella of IRE expenses. So they are part of it. Is whatever expenses that we pay to them, we classify it as intermediary related expenses. All right. Even though they don't earn commissions per se, but they are earning some fees. For example, they charge certain fee for certain services. Those are all classified as IRE as well. Okay, so how is it computed? All right. I need to bring your attention that everybody knows there is 3%, but you must understand that is on gross direct premium earned. What is the difference? Gross premium and gross premium direct earned. Gross direct premium earned. Okay, I'm going to give a very simple example. Let's say the policy is 365 ringgit. A policy is 365 ringgit for 1 year. Let's say 1st January we start, 31st December the policy expire. All right. So what is the earned premium today? Today is 20th of February. So meaning January there are 31 days, February there are 20 days. So it's already 51 days. 51 days meaning if your policy is 365 ringgit, meaning our earned premium as at today under that policy is 51 ringgit. So it's not 365 ringgit, but it's only 51 ringgit. Tomorrow is 52 ringgit. The day after is 53 ringgit, and so on and so forth. So you imagine, if we issue one policy only, so we have, today our earned premium is 51 ringgit, but we issue thousands of policies, so you multiply by that thousands. Okay, so this in an illustration how that 3% of the earned premium is calculated. All right. Okay. Another thing is that Bank Negara asks us not to combine the two motor and non-motor businesses. Reason being, why? Okay, for motor businesses, as you all know, the commission structure is only 10% is fixed throughout all the motor section. But for non-motor, there are some policies which are 10%, some policies are 15%, and some policies that are 25%. Okay, so because of that, we cannot lump the two together because it's not standard. Non-motor businesses also will generate a lesser loss ratio compared to motor, as everybody knows. So because of that, we cannot use the two to combine. We have to separate it. So separate it, motor, the RRE for motor, and the RRE for non-motor. Okay, but don't worry about that. This is our job to segregate it and nothing to do with you guys. All right, you don't have to worry so much of that. Okay, so how are the expenses classified for promotional gift offered to customer? Right, so any form of expenses incurred for promotional gift offered to selected customer, directly or indirectly, if it benefit the intermediaries, it will be classified as RE. What do you mean by benefit the intermediary? Okay, for example, if you were to give certain small promotional gift to your customer, let's say, for example, you give a cup to the customer. So in other words, you are benefiting because you will make more sales because your cup will attract more customers to you. All right. So basically, whatever expenses that incur for us to make the cups for you to give away, that is considered as RE. All right. Hopefully, you all understand what I'm trying to say. And every time we organize some campaign or for you or for the entire nation, all these expenses will become under IRE. Okay, so again, what are the things that we can spend on later in the later slide? Last slide, I will show you what are the list of items that can be spent on. Okay, this is the last slide, and these are the type of expenses that is lumped under the intermediary related expenses. First thing first is the advertising and promotion. Okay, you need to advertise, you need to promotion, you need promotion for your intermediaries activities to attract more customer. We will spend on this. The annual conference, the convention, the holiday trips, like for example our NEC, and these are all considered as IRE. Annual dinner or similar event organized by yourself. Let's say, for example, you want to organize a dinner with your customers. It can be done, but it's considered as IRE. Expenses related to arrangements as banca assurance. Okay, why is this under IRE? Is because banca assurance is an arm of insurance company to do the business on behalf of the insurance company. So basically, we have agents, we have brokers, also we have banca. Okay, so banca is also considered as our intermediaries, and whatever expenses incurred by them is considered as expenses under IRE. Then, let's say if you were to sponsor or organize any activities by yourself at your place, for example, you want to do a road show or whatever, those expenses incurred will be considered as intermediaries as well. Intermediary related expenses as well. Lucky draw for intermediary. Okay, normally during Chinese New Year or any function, we will have this. Or when you are achieving certain sales target, we have this so-called incentives. Again, this all under IRE, right? And the roadside service assistant or the towing service assistant, breakdown road, all these provided the call center costs, all these are considered as intermediary related expenses. Give item linked to production of insurance product to be given to intermediaries. Let's say, for example, remember your year end, we have this rate, nice little rate notebook given to you all. Those are on the IRE. Okay. Merchant discount rate reimbursement. This is more to those agents that have, let's say you have a credit card and the credit card bank give you certain discount or certain incentive. And if you were to reimburse the bank, this is considered as IRE as well. Risk management services not set on arm's length basis, basically applicable to co-insurance or any related reinsurance or any company. Mostly this is related to big risk where we have to engage very professional risk engineer to evaluate the risk. So all these expenses also considered as IRE. And last but not least, expenses related to any form of promotional gift that every now and then we will give out to you guys, for you to give to your clients, and all this will be considered as IRE as well. So in a nutshell, so long as we spend all these items within this category, all this item is considered as IRE for us to spend on. All right. So that is the last of my slide, and I'm coming to the end. It's a Q&A session. So Fatah, maybe you can unmute the mic and let the floor ask me any question if they want.
Okay, sure. I'll do that. Yes.
Hello,
All right.
Mr.
Okay.
Peter. I am Esther. I'd like to check the slide that about the credit card rebate. I thought Bank Negara disapprove.
Yes.
I.
This under merchant discount rate reimbursement, right? Last time is allowed 1.25%. Last time it was allowed, but now Bank Negara spread this. But for certain franchise dealers, there are still some arrangement by the bank towards them for the franchise, and some big what do you call that? Big corporate direct agents.
No, the questions that I'm asking is whether it's approved by Bank Negara or not approved by Bank Negara. Questions.
For merchant discount rate reimbursement for credit card, from credit card, right? From credit card, right?
Yeah.
Okay,
Yes,
credit card,
yes.
those days, we have to sponsor on your behalf. So we are not allowed anymore. But for big franchise, those franchise dealers that arrange separately with the bank, and if the bank were to allow them, the differences, the sponsor amount is still can be considered, but it's not up to 3% anymore. I'm not sure how much. And normally we are not keen to participate in this unless you are doing, let's say for example, a big promotional business discount for, let's say for example, you have let's say you have a big factory, you got a big factory and you have, let's say 1,000 workers, and each of the workers are willing to purchase a separate policy, individual PA, then okay, and then you allow the workers down there to have an installment with a bank, and the bank is willing to participate. But that kind of arrangement, you have to seek separate arrangement with the banks, and we no longer participate in that unless the volume is big enough for us to do it. I hope you understand what I'm trying to say. This is more towards big franchise dealers who have many millions of production and they are willing to work with the banks, and the banks are willing to give them some certain leeways on the installment or whatever, or zero installment basis and things like that. So this is a totally different ball game from the normal agency business.
Okay, but actually it's allowed by Bank Negara. It depends on insurer, company.
For franchise
right?
dealers,
According to
yeah,
to
for
your
franchise
slide.
dealers, they are
Uh-huh.
still allowed to continue.
Okay.
I'm not going to mention any insurance name, but I think one or two in the market are doing that continuously, doing that. Because this is a broad guideline from Bank Negara, so we have to share with you all this broad guideline. But again, like what you say, maybe it's true that each insurer have their own preference business model.
Okay. Thank you, Mr. Peter. Thank you.
Any more questions? Well, if not, then it's about lunchtime. Everybody is hungry. So maybe if there's no more question, any question from the chat box, Fatah, can you see?
Wait, let me just quickly check. Okay, it's just a statement. And then one, other insurance not under the arm of OCC guidelines, many are still giving 1.25%.
Again, like I say, I do know because a few of my very good supporters told me that some banks are, some insurers are working with some banks to allow to do it. Like I say, if they want to do it, there's no hard and fast rule saying not allowed, but Bank Negara did tell us that whatever that you are giving or you are doing, is in breach of the IRE guideline, so to speak. Actually, to be honest, I'm not saying anything, but I think this is a very broad guideline. It is subject to a lot of interpretation, how you interpret it and how you manage it. But at the end of the day, the 3% on earned premium is the max that any insurance company can spend on for all these activities. I have one question. Is it a question? Is there a question
like
or
a statement?
It's like a statement.
Hello.
Okay.
Hello.
Yes, carry on,
yes.
yes.
I'm Adeline here. Can I ask a question?
Yes, Adeline.
Okay, regarding I think one slide before this, there is one slide says that if this one, the expenses incur promotional gift offered to selected customers by intermediary A. That means if insurance company is offering something to my customer and it consider as my expenses. Is it what you mean by this?
Yeah, correct.
But then in this case that company do not get consent from us. Let's say I'm intermediary A and insurance company actually just give maybe my customer was selected, but they did not give me my consent and then they deduct under my expenses. You get what I mean, Peter?
Oh, okay. Good question. So it's like it's good
So
that
it's
we
like
do
not fair
and it's
for
no
me,
good
right?
that we
It's-
do, right? We
Yes.
might
Yes.
Yeah, good question.
Then
Okay.
we won't know that whether you select my customer, you select their customer, you select B customer or E customer.
Yeah,
And then you
it could
select
be
my customer,
anybody lah.
my
It could be
expenses become so high, you know.
Wow, your question is spot on. Yeah, it's true. I agree. Okay, but the thing is like this. So whenever we do promotional gift, for example, the year end items or whatever promotional gift, normally we have to be fair to everybody. I cannot be selective saying, hey, your customer I don't give. I cannot, right? It's not fair, right? Let's say the campaign, the promotion period, it so happened in April and so happened that you have a lot of customers in April and it so happened that one of your customer is there. I mean, yeah, but then the overall calculation is based on the IRE of the company. So So should be okay lah. I mean, you won't be penalized that we don't penalize the agent anyway. So your concern about penalizing you, I don't think so. You have to fear so much because your profit com and your other expenses is not going to be hampered if the promotional gift is done by the company nationwide level. So it's not fair to be penalizing you.
But
Don't worry
it's
about
done
it.
by okay, it's done by company, but it's
Mm.
under our so-called intermediary is IRE, okay? Then it affect
Mm.
our profit commission what? Correct or not?
Not really, because your profit commission is the expenses incurred by management expenses, and also there is a portion of IRE inside. Overall so whatever, so okay, so in that case then we don't do this. Also can
No, I mean,
we scrap this?
because you do this without our consent and it's not transparent and it indirectly affect our profit commission. So we already earn so little, and then all these OCC, some more no travel, some more this and that.
Okay. I need to correct your statement of no travel because of IRE now being so-called defined. So we can actually we organize NAC trip again for this year, but our NAC trip
I know, but if you look at the
yes.
NAC so-called terms and condition, if you understand the structure, then you know how is it.
Well, you cannot win all, and like I say, we have so many agents, we cannot bring everybody to go, which we want to, but I don't think so we are allowed. And then there's no place that can accommodate all of us anyway, so we have to be very selective. That's the selective criteria for that.
We already
I'm so sorry.
so tiny, only commission.
No lah, Adeline, don't be so humble. But like I say, don't worry about if I'm not mistaken, there is no on your profit commission, it's not affected at all under this. You hang on, just give me a second.
Because this one under expenses, also one of the expenses category, and then it should be affected by right, unless it's only ME. Then
okay, I have the full specs of information here. Will this impact the computation of profit commission? Just now, there is no change in the existing profit commission computation. Okay, so it's a really clear guideline. So the profit commission will not be impacted. All right, so don't worry about it. It's already mentioned here. Yeah. So rest assured, the expenses incurred under this will not directly impact your profit com, because like I say, it's not fair to you, because you let's say you bring in a lot of good business, you deserve this profit commission. So that
then
profit commission
then you try
is
to escort promotion to my customer. I will see how my profit commission impact.
like I say, I cannot. Then
Escort my customers.
When the promotion gift is all. But then again, we are now very selective. Normally year-end promotional gift we will be given to you guys, and it's for you guys to distribute, Kamo. Am I right? I'm sure it is.
No more already. No more given to us.
Yeah, we have year-end we give the notebook. We have year-end. It was a red notebook, very nice. I didn't have a copy with me. Anyway, like I said, don't worry, it does not.
Let me check with my marketing.
You check your marketing. It's a red notebook, but like I said, it won't impact on your profit com. Do you have any other? Thank you, Adeline. Do you have any other question from anybody else?
No other. We can go lunch. And cannot take expensive lunch unless generally buy us lah.
Get your MO to sponsor you. That one entertainment is under management expenses, so it's okay.
Can.
Thank you so much, everybody. Thank you so much, and I'll see you again. Take care. Okay, bye.
Thank you. Thank
Bye,
you, everyone.
bye.
Thank you, Mr. Peter.
Thank you.
Thank you.